Warren Buffett is perhaps the most famous investor of all time. For many years, his ability to beat the market earned him the nickname the Oracle from Omaha. When Buffett speaks, many people listen, and rightfully so. However, in recent years, Buffett has also made a name for himself as one of the most outspoken critics of Bitcoin. Despite his undeniable success in the domain of value investing, Buffett is dead wrong about Bitcoin. Buffett has certainly never shied away from telling us how he really feels about Bitcoin, from first dismissing it in 2013 to calling it a mirage in 2014, rat poison squared in 2018, a delusion in 2019, and finally in 2020 declaring he doesn't own any Bitcoin and never will. However, going beyond the headlines, it was very clear to me that most of Buffett's critiques boiled down into one overarching concern: Bitcoin produces no cash flow. Listen to him explain in his own words.
It doesn't reproduce, it can't mail you a check, it can't do anything. And what you hope is that somebody else comes along and pays you more money for it later on. But then that person's got the problem. But in terms of value, zero.
Buffett is correct to say that Bitcoin does not mail you a check. However, he's wrong to assume that an asset needs to generate cash flow in order to have value. Gold does not produce a return, yet humans have valued it for thousands of years. Real estate often does, but doesn't need to generate cash flow in order to be considered a valuable asset. Historical artifacts cannot mail checks, yet people continue to collect them. Artwork produces no yield, and yet the global art market is valued at over $68 billion. Let's reread Buffett's quote, but this time insert Mona Lisa for Bitcoin. The Mona Lisa doesn't reproduce. It can't mail you a check. It can't do anything. And what you hope is that somebody else comes along and pays you more money for it later on. But then that person's got the problem. But in terms of value, zero. Ironically, this statement is largely correct. The only way to make money on the Mona Lisa would be to buy it and then sell it for a higher price in the future. But does this mean that the Mona Lisa has no value? Of course not. And Buffett himself would certainly agree. After all, the Mona Lisa is a sought-after collectible item created by one of the most famous men to ever live. The simple truth is that the free market has determined that the Mona Lisa does not need to produce cash flow in order to have value. As a quick thought experiment, imagine for a moment that every human on Earth comes down with a bad case of amnesia. Imagine that all of the great men and women of history have been completely forgotten. Imagine then that works of art are no longer valued based on anything but their appearance. Would the Mona Lisa be valued at $867 million? Certainly not. Therefore, we can surmise that the value of the Mona Lisa is simply based on a certain collective perception of society, and if this perception is changed, so too will the value. While this may at first seem to be an abstract analogy to Bitcoin, it perfectly illustrates from a first principles perspective why Bitcoin has and will continue to accrue value. We as a society value the Mona Lisa because of its unique qualities, such as the painting's age, the artist behind it, and the history of the painting, including its theft in 1911. So long as humans continue to place value in these qualities, the Mona Lisa will retain a high price. The same goes for Bitcoin. So long as humans continue to place value in ideas such as the protection of wealth, individual sovereignty, and censorship-resistant payments, Bitcoin has no choice but to continue to gain market share. Whether most people realize it or not, we are at an inflection point in the Western world. Negative interest rates, persistent inflation, social credit scores, the elimination of cash, and the introduction of central bank digital currencies, which will have the ability to censor and track each and every transaction made by an individual, are lurking around the corner. Bitcoin is not the pointless speculative asset that many people so naively make it out to be. It is quite literally the most important tool for wealth preservation, liberty, and sovereignty that we have available to us today. But that's for another video. Back to Warren Buffett. Yes, Warren, you are correct that Bitcoin produces no cash flow. But do you know what else doesn't produce cash flow? Oxygen and water, the building blocks of life. Now, I'm obviously not equating Bitcoin's importance to oxygen or water, but rather just highlighting the absurdity in Buffett's presupposition that value must be accompanied by cash flow. If all this sounds like common sense to you, that's because it is. So how then can one of the wealthiest and experienced men in the world not recognize this? Ironically, the answer can be found in a quote from Buffett's longtime sidekick and fellow Bitcoin derangement syndrome sufferer, Charlie Munger. "Show me the incentives, and I'll show you the outcome." Let's take a quick look at Buffett's incentives. The first and most obvious is the fact that Buffett first publicly dismissed Bitcoin in May 2013, when Bitcoin's price was only $100. Admitting error at this point would mean admitting to missing out on a 46,000% opportunity. By continuing to double down, Buffett can avoid taking responsibility for this missed opportunity. Next, let's take a look into Buffett's portfolio. Buffett is the chairman and CEO of Berkshire Hathaway, an insurance company turned quasi-mutual fund, with an equity portfolio of over $320 billion. Nearly a third of the portfolio, or $100 billion, is invested in financial services stocks. Berkshire owns 12% of Bank of America, 19% of American Express, 13% of Moody's Corporation, 10% of U.S. Bancorp, and the list goes on. It's not difficult to see how this could pose a conflict of interest for Buffett regarding Bitcoin, if not explicitly, then certainly implicitly. Listening to Warren Buffett's opinion of Bitcoin is like listening to a kerosene lamp salesman's opinion of electricity, or a horse carriage salesman's opinion of automobiles. In the end, this video is not meant to change the mind of Warren Buffett, but to highlight that being an expert in one area does not make one an expert in all areas. When it comes to analyzing financial statements, producing discounted cash flow models, and investing in undervalued stocks, Buffett's success is undisputed. But when it comes to having the vision to recognize paradigm-shifting technologies, it may not be the best idea to take advice from the man who passed on Google's IPO in 2004, refused to invest in a single tech stock until 2016, only realized Amazon's value in 2019, and whose entire livelihood is based upon the continuation of outdated legacy institutions. As hedge fund manager Bill Miller pointed out, Buffett may well be right. Bitcoin could be rat poison, and the rat could be cash. Given that Berkshire Hathaway holds a massive $144 billion in cash, Buffett may come to regret his famous quote sooner rather than later.